Your price target 335. The street's at about 342. I'm going to go back to your price target. It implies about a 2% upside from here. What are you expecting from this result?
So yeah, but we had a buy rating for Caterpillar for some time, but after seeing a 60% rise from lows late 2023, we actually downgraded to hold back in April. And since then, it's been, as you said, it's been down roughly 16% or so. I think Q2, honestly, we're expecting sales guidance to most likely come down. If we look at a few, like you mentioned, macroeconomic headwinds, both manufacturing PMIs have been down right last 21 months. We only have 1 month of expansion on record here, which is quite impressive or notable. And we have construction spending, which is clearly starting to stagnate because of a higher interest rate environment. And even if we look at some of the direct peers like CNH Industrial, Volvo Group, we can really see that a lot of them have revised their sales targets down. So we think that sales expectations are going to be moderated because of the push out of expectations for interest rate cuts. And whether this is going to heavily impact the stock or not will be seen, given that it's already down somewhat.
Jonathan, you just said that the expectations for interest rate cuts have been pushed out, but actually we're hearing that a lot of people think that we may even see a 50 basis point cut coming up in September. Just looking at the numbers, U.S. non-residential construction, that's about 75% of Caterpillar's business. Wouldn't a 50 basis point cut or even a quarter point cut, wouldn't that be a big tailwind for that business?
Oh, no, absolutely. I'm talking about in regards to when we entered the year, right? We were originally, we view that original guidance, which is for 2024 sales to be in line with 2023, is assuming that there would be a cut a little bit sooner than what we're expecting here in September. So given that July, we didn't see that cut happen, we think that's really translating to business investment in capital goods being kind of pushed out a bit farther.
Okay, so the U.S. is a big part of the business, Jonathan, but what about China? Is there China risk when we look at Caterpillar? China's about 5 to 10% of revenues. We've seen a lot of companies see a lot of weakness in China, and also competition from local brands when it comes to consumer-facing brands. Does Caterpillar face domestic competition in China?
So China's been a weak market for some time now, and there really wasn't much of an expectation for recovery. But given what we've seen in peers and other industrial conglomerates that are facing China headwinds, it's been a bit weaker than anticipated. So even though it's just 5 to 10% of sales in aggregate, this could be an additional headwind that could really crimp sales expectations. Okay. So we do think that's that's another factor that could be a net negative for Caterpillar.
What about the read on the broader economy? What should we look for in this report that might give us a read on the U.S. economy and also the global economy?
Right. So as far as Caterpillar being a leading economic indicator of sorts, we don't see much value there. There's already been a lot of other companies, direct peers, that kind of given that insight as far as what's going on. But we think as a lagging indicator, it could be of a lot of value in confirming, is construction spending really slowing as much as what we've seen from peers, or is it more of like idiosyncratic challenges with those specific companies? So Caterpillar can kind of highlight exactly to what degree we're seeing a construction downturn. Additionally, manufacturing, right? So their energy and transportation business is tied to industrial activity. So once again, we can see that get a read on the health and manufacturing sector, as well as U.S. non-residential construction spending.
All right.